Hi guys, welcome to another Copy Trader tutorial. This tutorial is going to be for the legendary settings analyzer, which is arguably the most powerful tool on Copy Trader. Now, it is the most powerful tool, but it does take the most efforts because in the simulator, you're getting results very quickly based on historical data, but there's no way for the simulation to know what happened between the buy and the sell. So you cannot factor in things like stop loss and take profit, when oftentimes you'll find that you would have actually made more money with the take profit than you would if you copied the trader's sells. Because oftentimes the traders, they get in at good entries, but they don't maximize their profit, or they don't sell and they hold too long and they lose profit. So what this does is looks at a bunch of trades, however many you want, and it analyzes through that set of trades what would have been the best settings. So basically, it will tell you in the last, out of those 100 trades that you checked and recorded data for, this stop loss and this take profit would have yielded the best results over the course of every trade, and it would have given you this ROI. So it looks something like this. So it runs all the calculations, tells you what ROI you would have gotten with this stop loss and this take profit. Shows you what would have happened. You would have lost a bunch of trades. You would have been down for Solana, probably been freaking out. But then one win puts you up for Solana, and then you lose 4 and you win another one. So now you're up 11 Solana. You lose a bunch, and then eventually you're up 39 Solana. So that's pretty cool to know that information. You can also get a lot of good insight on what trades you should enter and shouldn't enter in relation to the market cap. And then you can see like all the different combinations of stop loss and take profit and what the results would be. So you can choose the strategy that you like most. You can decide to copy the trader's sells as well as using these settings to see if that would help, but it would not. And you can choose a trailing stop loss. You can configure calculated smart exits, and you can manually test any strategy. So we will go through every one of these, but first you need to know how to make this. This is every trade on paper. In this case, it's 50 trades. And this is what it looks like. This is what you want to make. And this is what the program knows how to read. It has to be in this format with this row here, and then the trade data going to the right. You don't have to record the cells, but you can. And one thing to note is that at the current moment, you can only record the first buy and the first sell. So, it's not perfect. If the guy buys 4 times and sells proportionally 20 times, we can't yet calculate that. We will be able to in the future. We are working on it. But what this tool is for is to just see where they enter their first buy. Where do they enter? And based off their entry, what happens in the trade? And could we have copied their trades and made a bunch of money using stop loss and take profit? We throw the sell in there. It's not necessary. You can leave it out. But we throw it in there because then we can see, hey, maybe if we sell the first time they sell, it will actually help us. In this case, it wouldn't. If you don't add the sell, then this result will just simply look exactly the same as this result. So this is what we need to make, and this is how we do it. You find your trader that you like, and you open a new Google Sheet or any Excel or pages or numbers on Mac. Doesn't matter. You just need to be able to save it as a CSV file eventually. First column, token name, entry market cap. Okay, so what you would do is you come in, you find the first token, cup C. Now, as you do this more, you will get faster and faster. And what I do now is I write all of this down on paper as I am doing this, and then I record the data afterwards so I don't have to keep switching between tabs, but you'll find what works for you. What's important is that this data is accurate because it's what's giving you these numbers. And if you don't do it right, then these numbers will not be right. And that is on you. This is just educational information. It's not financial advice. What you do with this information is up to you. So take your time, do it once, and do it right. So let's see for cup C. I come in, I'd open Photon, paste it in, open the token, come back, get the address. And I do not recommend trading with this guy. I'm using him as an example because he has thousands of followers. He has 40 copy traders. You will probably get burned if you try to copy trade with him. This is just an example. Okay, looks like a pretty shitty token. Okay, so it looks like he bought twice, sold once. We're looking for the first buy only, not the second buy. And like I told you, this guy is a shitty trader to copy because the first buy is here. Look how big the candle is when he buys because he has so many copy traders. So if you copied him, you'd probably end up buying up here and you'd get burned. So what you want to do is first make sure that it's on market cap. I just had it on price. I switched it over. You may not have seen it in the edit, but it needs to be on market cap. Now what we're going to do is we're going to estimate our entry based on slippage. And this is the fastest way to do this. And basically what I do is if they bought, let's say for example, in the first candle, in this candle, and they bought around 8.4 thousand market cap, you can't really see the market cap. You can see the price. So you can see where they bought if you switch to the price chart. You can see actually like where in the candle they bought. But honestly, no matter what bot you use, there's going to be slippage. You're probably going to buy minimum top of the first candle. Worst case scenario, top of the next candle. So I don't like to switch back between market cap and price and have to re-enter the address every time, and then because that would take twice as long, and you need to account for slippage anyway. So if he did buy here, you'd probably end up buying somewhere around here, worst case scenario here. And if the trader has a lot of copy traders where he buys with huge amounts, then the slippage is going to be higher. So I like to estimate for the entry that you take the candle that they bought it in and you estimate that your entry will be at the highest point of the first or second candle. So in this case, it's the first candle and it would be all the way up here, which is not a good entry, but realistically, if you traded with this guy and you didn't have slippage limitations set, you probably would get in right about here. So now you have your estimated entry. And this is a rough example because usually we will only trade copy traders who have low slippage and are not heavily copied. So usually we'd see something like this as their first buy, where you see it here and you say, okay, we estimate that we entered around 11K. But for this guy, you have to be honest because that's realistic. So if you wanted to trade with this guy, you'd have to accept a terrible entry and see if you can still make money. So we have an initial entry at 28K, and then you want to take every important point throughout the trade until the trade goes to zero. And we always assume the trade goes to zero because that's how the algorithm works. Because it just, even if the coin is not at zero and the trader has exited, we still assume that it went to zero just so that the algorithm could anticipate the best stop loss for us because we would have exited the trade within a few hours anyway, most likely. So what's the next important point in this trade? You would probably think that it was here, right? 6.3K goes down all the way to 6.3K and then comes back up to 14K. You'd be right, but you also don't really need to record this or this point. Why is that? Because the price never went back up against above our entry. So all that really matters is that we hit this high and then we went to zero. And that might take you a couple times to kind of get the hang of, but essentially the algorithm, no matter what you write, is going to see that we went up to 28, we did some stuff, and then we went to zero. Or you can just tell it you went up to 28 and then went to zero. Either way is fine. So if you're not sure on whether a point is significant or not, you can add it because it's not going to hurt. So we entered at 28, then we come down here, we hit 6.3 and we go back up to 14. So 28, 6.3, 14. Then we have the trader sell. Now you don't have to record the trader sell like I told you. If you don't, then in the settings analyzer, the results when you go to the sell tab will be exactly the same as the main results. So the algorithm can accept a sell or not. I always put the sell because it just gives you another variable that may help you be profitable. So we entered at 28, it went down to 6.3, came back up. We don't count the second buy or any buy after the first buy. It came back up to 14, and then he sold here. So we assume if he sold here that we would probably exit at the worst point, which is either the bottom of the first or second candle. In this case, it's the bottom of the second candle. So we have a 6.6 sell. And the way you denote a sell is by putting in the market cap, space, dash, space, sell in capital letters. And then the algorithm will be able to know that's when they sold. And then we go to zero. So that would work just fine, 100% fine. But what would also work would be if you wrote 28, 6.6, sell, 0. And it would be a little bit faster because, like I told you, these points are insignificant because we never reach a new all-time high. If we entered here and we came down to here and then we shot up to 37K, then this point would most definitely be significant because it would be a huge factor in your stop loss and what stop loss you could get away with. So you would measure here, you would measure 6.3K, you would measure 36K. If we came up to here, and you'd measure where they sold and then 0. But because we never went above our all-time high, this will have no effect on our stop loss because eventually we're either going to sell with them or go to 0. Do you understand what I'm saying? But if you do add this point and this point before the sell, the algorithm will have the same exact result because it knows we went up here, they sold here, there was never a new all-time high, and we went to 0. Whatever happens in between, you could technically put this point, 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 and then put the sell, and then 0, and it's still going to know we went up to here, we never went higher, we sold here and went to 0. So you can put as many points as you want, but you don't have to because it takes a long time. So, if you're unsure, add it. And when you get better at it, you can just start to be like, okay, we entered here, we went down, we went up, we sold here, and then we went to 0. And that would be what that would be. So I'm going to put it like that because that would be the best practice. But again, you do what you want. As long as you are not missing any important points, it's okay to add more than you need as long as you're not missing any that are important. Okay, I had to take a break after starting this video. So as you see, this trader actually traded some more trades. And in this case, when you're doing the recording of the data, you want to start at a trade and then go down and not be jumping around. So I'm just going to ignore these trades for now. If I want to add these trades later, or if I wanted to add these trades now, what I would need to do is add them above this. And the reason is because we want to have all the trades in the right order always. So if I complete my list of 50 and then I wait and I want to add another 10 trades that the trader did tomorrow, I'm going to add them at the top because the reasoning for this is because when you upload your data, you want this chart to be correct. So you want this to be the latest trade, you want this to be the earliest trade, so you can see exactly what's happening in the correct order. Because it's very useful because you could see like, okay, if he never wins um, 2 trades in a row, or even without a 3 trade gap, then anytime he wins, you could pause him for a couple trades, then turn him back on, just to eliminate some losing trades. There are plenty of strategies that you can do. So I just wanted to mention that. The second thing I wanted to mention was we are getting 50 trades or however many trades in a row. Now, this is very important. And what you cannot do is be, because the way GMGN.ai works is that if he bought a coin 10 days ago, but he just sold some of it, it will shoot up to the top of the list. But what we want to be very careful of is the holding duration. So a lot of traders will hold for a long time, which is fantastic, but you have to be careful because they could buy 1,000 coins and 990 of them do terribly, or 950 of them do terribly, and they never sell them. And then what will happen is those coins will disappear into the abyss. You'll never see them. And if they just keep slowly selling the good ones, then all the good coins will be here at the top. And if you were to analyze just the top without taking into account when they bought them, they would look like the best trader ever. And then you'd get results that look amazing, and you'd try to trade with them and you'd lose all your money. So what I'm saying is that since I am, let's look, since this guy, he trades about 15 times a day. So if I'm looking to check 100 tokens or 50 tokens, then I'm not going to buy or check anything that he bought probably later than 3 days ago. So I would come here, I'd be checking all these, good, because he obviously just bought them. And if I were to see any like this, 61 days, I would ignore it. I would skip it. I would even skip 4 days. I would even skip 3 days until I finished all the ones from today. And then I finished all the ones from that he's been holding for a day, and then all the ones he's been holding for 2 days, and only then would I move on to the ones that he was holding on for 3 days. So it's very important is that these are not in order all the time from when they bought them, because these are last active. So you need to be very careful with that and make sure that you are only checking the ones that he bought today, and then you can check the ones that he bought yesterday or has been holding for more than one day, and then more than 2 days, but you can't uh, check these three and then check one that he's been holding for 2 days and then check the next one, because that coin is not in the right order. So it's, I hope that makes sense to you. If you have any questions or you want clarification on that, I can't exactly show you here because he usually just buys and sells immediately. A lot of traders do that, but a lot of traders hold, and the top of their GMGN is like a highlight reel because they're just selling slowly their best coins. So be careful. Okay, so I'm just going to check a few just so you can see like some different scenarios. I'll check these 2 losing coins, and then I want to definitely get some winning coins so you can see. All right, so here we go. Okay, guys, for this one, yeah, I mean, this is another example of just why I would never trade with this guy, because, you have to be real ruthless. You look at this and say he got in this candle here. I'm interested to see what price he actually got in. So 4321 or 4321. All right, so he got in actually literally right at the top here. This is why we do what we do, because there's just no way to tell. You can't just imagine that you're going to get the best entry or that everything's going to work perfectly in your favor. So in this example, it shows that he got in this candle. So he actually got in right at the top. So like I'm telling you, there's no way you're getting in anywhere here unless you're using like at least 0.01 as your buy fee with a tip. So if you really want to be super targeted, what you can do is trade with this guy on whatever fees you can afford for like 3 trades, and then see what the slippage is. So if you see on 3 trades you're getting in around here, you come in, you can measure, okay, I got in at about 16% slippage, and you can make an average, and then you can come in on every coin. You can check the price where he bought it and you can start your calculations uh, at like a 16% slippage higher. So you'd say that you started here at 25,000. But for me, I'm trying to do this fast. I'm trying to find traders that can win fast. So if you want to do that to be more precise, you can, if you know what slippage you're going to get. But for me, I'm just saying he bought here. I'm assuming I'm buying at the top of this candle. I'm assuming the worst case scenario. And if a trader continues to show huge spikes like this, then that's usually a trader that you will lose with anyway. So it's going to give bad results. So it doesn't even matter. Like I want traders that even if you do buy at the top of the second candle like this, that it's going down and then it's going up, so you can still win. These are the traders that I want. So let's say this one. Let's say we're getting in here. I'm going to be ruthless. You know, I'm not emotional about it. I'm like a robot. I just do it fast. So 32, come down, never go back up. Sell at 50, sell probably at 13, and then it goes to 0. So real quick. All right, one more, and then we're going to get into some winning tokens because you have to absorb the shitty ones. And I'm just, I'm just going to be unemotional about it because I haven't checked how quickly I can buy, because I know for a fact I checked this guy on copytrader.com and he has over 40 copy traders, so I'm not assuming I can beat them out. All right, so now I got to go find where he bought. Oh, okay, he bought a lot. Okay. Okay, so he bought here. This is a good example. So now remember, I'm just checking the first buy. All right, so he bought in this candle, so I'm assuming I get in here at 258. Okay, 258 is my entry. This one is more in depth, so this will be a good example. And then we come down to 228. That's our first new low. And then we go up to, I never count the wick unless it is going to hurt us. So the chances are you would never sell on that wick. So I only count the wick on an entry, but for an exit, like for a take profit, I don't count the wick. So we start at 258, come down to 228, and we go up to 283. Okay, so 253, then we go down to a pretty big pullback. And this is not a new low, but I'm going to count it because we are looking in our wallet analyzer for opportunities for trailing stop loss. So the only reason I count this pullback is because we have a new high after it. But if we only came like up to here and went back down, I wouldn't count it, obviously. So rule of thumb, you obviously count the entry, you count any new lows, you count any new highs, you count any pullbacks that precede a new high because you want to check for trailing stop loss. Because in this case, if we went up, we got in here, we went up 9%, that's very small. But if we had a trailing stop loss of like 10%, we'd sell here. Bad example, but you get it. So 236, and we go up to a new high of 301. Okay, this is where it's going to get interesting because this is a big one. All right, so we got a new high here, 301. And then we have a couple of these bouncy things, and these don't matter. This is a new low, but because there's no new high before an even bigger low, we don't count this, we don't count this. It would just take too long. So this is our new low here, 168. I hope that makes sense to you. If you want me to work with you one-on-one and help you and check your work or something like that on a couple of trades to make sure you're doing it right, I can do that for you. So 168, then we go up. This is not a new high. This is not a new low. We're bouncing around. We don't count the second buy. We're bouncing around. And we're bouncing to, this is not a new high, so I'm not going to even care about that pullback. We're bouncing to a new high here, 331. 331. And then we're pulling back but we just bounce around to a new low of 102. So 331 and then 102. So the bigger one. But you see how this will give you good data because you entered at 258, and if you don't sell, you could sell at 331 for a pretty good price. Or maybe it would be better to have a stop loss to save money on these and then win on some other ones. So, the algorithm, it knows everything. So here we are at 102. We go up, no new highs, none of this matters. And then we have his sell here. So we check, sell is here. So we would probably exit around here. 124 for the sell. And then we go down to a new low, but I think we have an even greater low before we have any new highs. So none of this matters because this is not a new high. So none of, you don't have to measure all this stuff because it doesn't matter. So you can count all these little points here, up, down, up, down, up, down if you want. It's not going to hurt. But eventually we end up here at our low. So the algorithm's just going to see that, okay, we had our high here, we sold here, and then we hit our low here before we started going back up. In which case, does this even ever go up? No, it doesn't. So really, I don't need this point. I don't need any of these points because we had our high here, and then we eventually went to 0. So we had our high here at 330, we have our sell, and then we go to 0. So we have our high here at 330, and then this is our sell because that point didn't matter, and then we go to 0. Okay, and that was GORL. The reason you write the token name down is so you can keep adding more tokens at the top as they trade more and keep tracking their trades and updating to see what the best strategy is over time once you find a winner. All right, now I think we're getting into a winner, finally. So it's okay if you can absorb the losses and then get a big win with a guy, then that is the game. So we'll check this one. And then I think we'll call it a day. I don't want to keep you on this video forever. I think you get the points. Copy his address. Nice. So I see that we can win with this one for sure. But you still have to account for the crazy slippage. So he bought in this one. So I'm saying we get in around here, 27. We come down to 21. Entry at 27, 21. Okay. Then we go up. I'm not going to count these. It's too small. We go up to 43. And that's pretty much our high. We go up to 43. I'm going to count this. We come down to 35, and then we go back up to 44. The reason I'm counting this is because that's a pretty sizable pullback that may trigger a trailing stop loss. So 27, 21. I could even count this. I count anything greater than 10% when I'm factoring in trailing stop loss. So, okay, I'm going to count that. So 27, 20, 41, 35, 43, 27, 20. I think that was it, right? 41, 35, 33, 41, 35, 43, 35. Come up with a new high of 44. I hope you're understanding it. In terms of trailing stop loss, rarely is it ever good, but the reason I'm coming up to here and then I'm measuring down to here is because if we had a trailing stop loss of 15, then it would trigger here. So I want the algorithm to be able to tell me that, because honestly, that's not bad. It's like, okay, we're here. That would probably already trigger that trailing stop loss. Yeah, 23. So technically, I didn't need to measure this pullback because we already had a pullback that big. And if we did have a trailing stop loss of 15, it would have already triggered. And if we had a trailing stop loss of like 20, it would have already triggered. But if our stop loss was 40 or something, then it wouldn't have triggered here. And then since this is the same size as this, I really didn't need to even measure this. I could have just went to this point, but it doesn't hurt to measure that and then measure this point. The results will be the same. So we measured that, and then we'll measure the sell. We're going to measure the sell all the way down here because he sold and it dumped, and there's a possibility that we wouldn't get out at a good price. So we would probably get out. We may get out here or probably somewhere here, but worst case scenario, we'll call it 32. Don't be emotional about it. The reason this guy's numbers suck so much is because he's not someone I would copy. So maybe it wasn't the best example to do in this tutorial, but I'll have another tutorial with a good trader if you want to watch it. And then, yeah, it comes down, never hits a new high, and then jumps around, goes to 0. This was a sell. And that was tail. So now we'll just do that for 50 trades. That would probably take me about an hour. You get the point. Then you would come here. You would download this as a CSV. And then you would come to the wallet analyzer. And lo and behold, there's no winning strategy. And I could have told you that. So there's no strategy for the combination of these 4 trades that would allow you to win at all. If you set a market cap limit of under 100% or under 100K, then maybe you could. I don't know. So 60, 60, 25, and maximum 99K. Then you can win, But yeah, you need, 4 trades is not enough to get a good result. You need at least 50 trades, in my opinion, because that gives you a good overview of the trader. I just don't, I don't want to waste this video to be incredibly, insanely long. So basically, the way this works now is you can see the best strategy without copying. Sells turned on. You can see all the trades. There's only 4 here. Market cap insights. You got all the strategies here that you can filter through. So you can say, I want high win rate strategies, even though they're not as good. And that would be the best high win rate strategy. So this is a losing trader. You can see what it would be like to copy his sells. Doesn't change anything. It looks like he would exit stop loss or take profit before he ever sold. You can add in a trailing stop loss, see if that changes anything. Absolutely has no effect on anything because our stop loss is 25 and the trailing stop loss is 30, and we must hit any take profit before trailing stop loss would trigger on the one winning trade, but everything would update. And then you have your smart exits that you can trigger and say, okay, if I'm up 50% and I don't hit my 60% take profit, I want to sell at 10%. I'm going to turn that on. Would that help? It would have no effect because when we went up to 50%, we never went back down. So yeah, but anyway, you could turn these on. You could test them out, and it would tell you if it has any effect. None of these have any effects because we only checked 4 trades, and there's no scenario in which these would ever be triggered. But if you checked 50 trades, and sometimes I could show you, I could show you that quick that this works. Let me just think about this. Okay, so if we just fabricate these results, and we say, okay, we entered at 10,000. Let's just fabricate these results. Okay, let's say we entered at 10,000, and then it went up to 20, and then it went down to 5 where he sold, and then it went to 0. So that would tell us that you could double your money. Let's say 30. I would say, okay, you can double your money there. Say that's a token. Oh, I know what to do. I'll show you how that works. We're just fabricating data right now. Trade names. So we entered every trade at 10, and this one came up to 150%, came back down. So I'll tell you right now, the best strategy for this would be a take profit of 1,000%, because then we take profit here every time. We missed this one, but it's going to have us have a stop loss of 10% most likely. Um, and a smart exit would be able to be triggered probably for this one, because if we came up to over 100 and then came back down before hitting our stop loss, we could make extra money. I'll show you that right now. So I'm pretty sure that's what the results are going to be. I'm going to upload that sheet. Okay. Yeah, so like I said, okay, yeah, 10x is actually 900%. So like I said, take profit of 900%, stop loss of 10%, ROI of 672. That'd be quite nice, right? Win rate of 75. So we'd lose that one trade like I showed you. But if you come, okay, so I'll show you right now with the smart exits. So we don't have any selected. So for example, if we selected this now, we see that our ROI would have went up 8%. We would have won every single one, because as soon as this trade would have lost, went above 100%, went above 20,000 market cap, and it came back down and hit 25% in profit, still it would automatically sell, or you would automatically sell. So you could do that, and if any smart exits were consistently working, it would show here, and you could sell manually like that and increase your ROI. So that's how that works. And then you have the manual tester, where you can test any strategy manually with the minimum maximum market cap. Copy sell. You can copy trader sells. You can check trailing stop loss, whatever you want. Obviously, this setup is not very good. Still a good ROI, because for outrageous trades, not a realistic scenario. So you have everything here. You can see how many calculations are being run. Everything. So very cool, very useful. What you can do with this, guys, I mean, this is historical data. So this, if I ran 50 trades and it showed me this, that means if I did this for the last 50 trades, these are the results I would have received, not including fees and like stuff like that. That's not factored into this. So you'd probably have to take like 10% off your ROI to factor in for fees. But yeah, that's what you would have gotten. It's a fact. And they're numbers. These are numbers. And if you get the data right from the charts, then the numbers will come out right. Now, there are some unique scenarios on the chart. One where the trader bought a coin like, and the coin is just like bonk and it's going for days. In that case, you could collect like 10 data points, and at which point you could just say it went to zero, because you probably would have sold at some point if it already went up like 1,000% or something like that. You don't have to check it forever until it actually does go to zero, because some coins simply don't go to zero. So you would just kind of check it for a while until like, okay, at this point I definitely would have exited this trade by now. I'm just going to finish it and write zero to complete the string. And there'll be scenarios where there's like the trader buys and there's a huge candle. You just have to say, okay, we would have bought at the top. And if you really find a good trader, then if he buys here, then you would just buy simply like right here, and then maybe he would sell here and you would sell here, so you'd see a nice profit on his sell. And if it went down here and came back up, then you could have even had a bigger profit. That's what this tool is for. But again, it's historical data, so it's what you would have gotten if you used those settings for the last 50 trades. But it absolutely does not mean that you will absolutely get those results for the next 50 trades. There's no guarantee. You can't predict the future. But if you find a trader and you check 50 trades, and these would have been the results, and you check the next 50 trades and you're getting something similar, you can see kind of a pattern like, hey, this guy is entering coins at a good time and I can win with him. Or if you check 200 trades or something and it says you can still get a 30% ROI, that's a pretty safe bet. I mean, you start slow and build up, but you don't risk all your money on it. You start slow, and but yeah, the more trades you collect, the harder it will be to find one strategy that works for everything. But if you do find one, which is often the case, then yeah, that's a real winner. Yeah, so that's about it, guys. That's how you use the settings analyzer. I know it's work, I know it's labor, but what I've actually done is I've trained a virtual assistant on Upwork to do this for me. So all I do is drop wallet addresses in CSV, and he goes through and checks 50 trades for each one. He creates the CSVs, and all I have to do is wake up, download them, and see if I have any winners. And I pay him $6 an hour, which is a good wage in his country. And that's something that you can do if you want, or you can just spend an hour checking them yourself. Spend an hour checking 6 traders to see if there's any gems there. You have to put the time in if you want to get the results. I really recommend using the market cap insights and then taking this optimal strategy, throwing it in the manual tester, and eliminating the bad market caps, and that will really raise your value. Try the trailing stop loss. It rarely has any effect because oftentimes it triggers too early, and it's usually not good to use it. And then utilize the smart exits, and then you could exit trades manually after they hit a certain threshold. And how you would do that is just on your Odin bot, when you are looking at your live holdings, if you see a coin is above 100% and your smart exit indicated that, if you go above 100%, you're pretty safe to sell on the way down at 25% without messing up your gains, then you could just, while that coin is above 100% in Odinbot, and it's a live holding, you could manually put a sell position on at plus 25%. And you do that by either editing the stop loss you have originally or adding a stop loss if you didn't have one. And you add a positive stop loss. So if you have a stop loss of plus 25, it's going to sell when it comes back onto plus 25, which is really cool. And you can check out Odinbot through this link. And that's it, guys. So if you have any questions, you want help, and you're not sure about this, reach out to me in the support tab, and I will absolutely 100% help you and check your work if you want me to. And we can talk about that until you absolutely have it down, because you don't want to be getting the wrong data, because then you'll be having the wrong results. So it's really important to really understand this. But that's it, guys. Thanks for watching.